Hey guys, how you doing? It's Mindset here, and I just want to give you guys a quick update on where Bitcoin is and could go to, both bullish and bearish. So we're essentially going to set up a possibility of a trade case up or down. So without further ado, I want to take you through and kick off at the 15-minute time frame. Now basically what we're looking at here at this level is you can see prices taking a tumble from the 48, 49 range, and we've come down and we've tested a few levels of support. Once, twice, 3, 4, 5, and now just about 6 times. Now, there's a key level of support here, and we're going to go and have a look at this, but for now, for context with where price is trading within this range, if you will, let's just take a look at the parallel channel that we've got. Now, this isn't just a random channel. We've pulled this from market structure itself, as you can see from key support here, and then resistance, a deviation of the range. And then again, we get a touch of the resistance level. And then again, this level here is being tapped many times. So there must be something going on there. But again, we'll come to that. Let's take a look at how we've formed this parallel channel outside of market structure. So what we're going to do is just take a look at the volume profile visible range. And you can see this is basically price being traded versus volume. And the areas that are outside of the white and the blue sections here basically make up 30% of the total volume traded in that area, whereas the white and blue make up 70%, with the red line being the point of control or the highest area of volume traded within the zone. Now, you can see we've been playing around these areas, and we're reflecting the value area low and the value area high-ish range of how this presents. Remember, we use market structure in these instances because you can't just rely on the value area high. It doesn't make sense. So we've covered that. Now what I want to do is just take that off and look at a high time frame perspective on a 6 hour. And we've got a fib retracement here that if we pull from the low to the high, and we put this on our mid fib range, you can see where we're at here. This also represents the weekly range. So when we just zoom in here, I beg your pardon. As we zoom in, you can see we've got a range here. We've got a swing high and a swing low. And now at these two Fibonacci points in the center here, is where we're tapping price. And we'll jump back in the 15-minute time frame just to have a look at that. So you can see, like clockwork, what we're tapping on here. The 1, 2, 3, 4, 5, 6 levels are not only just key levels of a value area low or a support at the $40,000, $41,000 range, but actually is the mid-range of the weekly. So this is the 0.5 level of the fibs when pulled from swing low to swing high or vice versa. So you can see that there's certainly some confluence in what's going on in this zone. So we'll hide that because we want to go and check something else out now, which is just how Fibonacci plays out within these levels, and we're going to hide the parallel channel as well. Now we use fibs a lot, and we always know and we check against where Fibonacci is playing out. So we like to use these targets, and the 618 was front run in this instance, pulling from a swing high to a swing low. But what you can see as we move along is that as price comes back down and rallies up, we see that the 618 to 79 level are hit. Price continues on. Range is in its own low time frame area. Goes and taps the 79 level and comes up to the 44,000 mark, which when we pull the Fibonacci from this level to our swing low, you start to see a relationship forming. And you can see again that we're hitting the 79 to 618 levels. And then not only that, after we've tapped this key level of support here, we then also pull our Fibonacci again. And you can see what's playing out right now. We're hitting this level here from the 618 to the 79. So we wouldn't be surprised if price plays down within the range again, considering that we are actually close to mid. If price came up, tapped the midpoint of the parallel channel and continued upwards, that's bullish. But for now, we just need to keep an eye out for these levels. Now, that's that, and I think we've covered that quite well. So we want to just close this section here. And what I want to do now is take you on a high level perspective call it the 4-hour, and let's take a look at where price could go in a bearish case, and then we'll check out where we can go in a bullish case as well. So look, from a bearish case, if we pull our fibs from the swing low to the swing high, basically what we've got is price isn't quite there yet, but you would expect, given the downtrend we're in, that price would play out near the 618 level. We don't expect it to be front run, but that's really an assumption, and we don't know until it actually happens. So you can see there's key levels of support at the 618 level, but there's one thing that I do want to show you, which is some naked points of control, which in an overall value area, within a day or a session range, are areas of the highest liquidity that haven't been touched and prices moved away from, up or down. So I've set these levels out previously at the 37,893 and 37,149 range, and these are levels that haven't been tapped. So you can see a bit of confluence with the 618 and these daily naked points of control. So there's a lot of liquidity resting below these lows. So it wouldn't surprise me if price did take a tumble down there to then bounce back off or push through, retest, and then head back down. But we just need to be vigilant and just keep our eye on what the charts present us and take the case that shows most value. So look, that's from a bearish perspective, and that just gives a bit of context and confluence and a bit of realism there. And then if we actually go and have a look at the bullish case in this respect, we can hide those naked points of control, and we can actually use a tool called a volume profile session volume, which will show us that if we do break out of this channel, go above these highs, break the market structure, come above the highs, retest, and then price rallies on up, then what we're looking at is we can expect to want to break this market structure up here, where these red lines represent naked points of control that haven't been tapped yet. So look, we could possibly see something like this if we reclaim this midline of the parallel channel, come back up, retest, something like that, and come back up and through. We really want to claim those buys because there's a lot of buy-side liquidity resting up there from where players have shorted the market. You can see a short squeeze as price rallied up perhaps, but then what we could do as well is look and then find ourselves in another Fibonacci realm where price hits this level and then either reclaims, bounces, continues, or we get sent back down again from a high level perspective, which then perhaps sends us to levels within this region down here, which no basis of it for now, but it's purely just a bit of an estimate. But yeah, hopefully you can take a bit of value from this, and hopefully the video isn't too long for you. But as always, take care of yourselves, each other, and say hi to your mum for me. Thanks very much, guys, and we'll chat soon.